I've never really been a Magnificent Seven investor. Most of my stocks were mainly small caps and a lot of unknown companies, but I did invest in Amazon in 2023 and I've been averaging up on the stock. And this year I see a lot of bad sentiment on the Big Seven. And I love buying stocks with bad sentiment and amazing fundamentals, which is why I bought the dip on Meta. I bought a little bit of Microsoft, but the only stock I haven't bought is Google. And in this video, I'm going to tell you why I don't own Google and when I'm going to consider buying the stock. And I'm going to keep it short as always. Now, for Google, they did really well on their latest earnings report. They slightly missed on earnings per share. It was like a 4 cents miss. It wasn't really a big deal. They did beat on revenue, which was pretty amazing. The company grew 24% in revenue. And it always amazes me how we have those $3 and $4 trillion companies still growing 24% in revenues. Like people used to say it's much harder to grow once the company is larger. Yeah, we have those $1 trillion companies growing like they're startups, 20 and 30 and 50% for something like Nvidia. And to me, it's really amazing. And they just keep on going. And it's been stunning to me. Google search is up 17% year on year, but Google search has been struggling a little bit. Over the last 3 quarters, Google search hasn't really grown at all. And the company guided that next quarter could be a little bit weaker for Google search. Some people on X are saying it's because of ChatGPT and Claude, and people are using AI to research a lot of things. They're not really using Google search as much. And that could be a possibility. I'm personally using AI a little bit more and talking with ChatGPT. So I'm experiencing this myself, and that could, I think, still be a long-term trend. Like I remember when Google sold off because of ChatGPT and no one will use Google. I think it was an overreaction, but I think over the long term, more people will use AI for whatever they used to use Google for. Like this is pretty much imminent in my opinion, but Google has so many other businesses like YouTube and others. The company will be fine. But I think this is still a long-term trend to pay attention to, and we don't really know why it hasn't been growing as much. And I personally would wait a few more quarters to see what happens, because the company has a history of being a little bit flattish on search, and then search goes up like crazy. Like December 24, March, and June, it was kind of flattish like it is right now, and then it went up. And the last 3 quarters have kind of been the same thing. So this is something that I'm monitoring, but so far so good on Google search. Google Cloud grew 82% year over year with a $514 billion backlog. The backlog has been exploding like never before. And the best part about it, not a lot of it is tied to OpenAI. So if you look at Oracle, you look at Microsoft, 50 to 60% of their backlog is tied to OpenAI. But Google has a much healthier, much more diversified backlog than many of those players. And this is amazing for a company like Google. Now, for this report, I was personally looking into the other bets because I'm very curious about Waymo and what kind of revenue growth Waymo is putting up, because Waymo has been expanding rapidly, and Google and Uber stock crashed, I think, like 30 or 40% due to all the expansions of Waymo without Uber. I'm like, Waymo must be doing really well. Then I look at other bets. The company is barely growing $10 million, $9 million year over year. Now, there's other investments as well, and other bets, like other than Waymo, they could be declining and offsetting Waymo. So we don't really know. But I personally had much higher expectations for the other bets, and those expectations haven't materialized. But the CEO of Google said that Waymo is far ahead of US competitors today, and he expects the business to meaningfully contribute to Alphabet's financials as soon as 2027. So we gotta see what happens, but I was expecting a little bit more from the other bets, and we have yet to see it from Waymo. Now, the big story for Google this quarter was the first ever quarter since they've gone public of negative free cash flow, and people are freaking out about it, and it's mainly because they raised capex to $200 billion. And the first question people ask me is that, yeah, they're spending on capex, but what are the returns from all this capex? We have yet to see all the returns that those companies are spending. And I kind of disagree. Like, if you look at Google Cloud, guys, I'm seeing a lot of returns over here from 33% growth to 81%. This is the third largest cloud provider in the world and it's growing 81%. Look at the acceleration. AWS is accelerating as well. Not that much, but it's accelerating. And Google is blowing up the backlog and they're still growing 81%. So I don't know about you guys, but I'm seeing a lot of results here. I'm seeing Gemini that was unknown and it took a massive market share from ChatGPT. So a lot of people say, "Oh, where's the results?" But I'm seeing a lot of results. Maybe we're not seeing it much yet on the bottom line, but so far I'm seeing explosive growth for a business that's fairly large, and I'm seeing a lot of results from it. But it's really hard to bet against Google's management team because they have an amazing track record of investing capital accordingly. The average return on invested capital of Google over the last 10 years is about 29%. 29% return on invested capital. This is crazy, guys. Now, it has slowed down over the last few years, but the average is still very high. They have a very good track record. If you look at a lot of the acquisitions like Planet Labs, SpaceX at a very low valuation, it's up like 50x for them. I think it's about $95 billion. Then they have, I think, about 80 or 70 billion so on a return in Anthropic, and they own a bit of ASTS Space Mobile, and they own so many stakes in so many other companies, and the YouTube acquisition, and the Waymo 85% stake. And do we really want to bet against them? Like, to me, it's really funny, guys, how a lot of people are looking at those big seven stocks, not just Google, but a lot of them, and they freak out on the first ever free cash flow negative number. Now, do you think those companies are stupid? Do you think those companies' managers are stupid? They built those companies and did all these things. Don't you think they know what they're doing when they're temporarily taking the free cash flow negative? Because they're seeing such amazing investments. Like, do you know more than they do? To me, I don't know, guys. Like, I would really trust the management of Google in making those decisions. And again, they have so many other businesses that are, capital light, like Google search is not capex heavy. YouTube, I make content for YouTube, is very capex light. Same thing with the ad business and Google Play and other things. So it's a pretty amazing business in general. Now you might say you speak very positively of Google, but why don't you own the stock? Well, the reason why I don't own it is because of the valuation. And I've been making many videos on analyzing the Big Seven. And I've been telling you guys the easy money in Google has been made. And people they get mad in the comments, but I'm just saying the truth. Like, Google has returned an amazing return. The stock, I think if I'm not mistaken, it got up to like $400. Yeah, almost $400 per share. Now, that was not all due to the company growing earnings, but the company faced a multiple expansion from like 15 times earnings, guys. So almost about 32 times earnings. 32 times earnings is way above the average multiple of Google. And it was very expensive in general. Like once you're buying Google at 31 times, you're not really betting on a multiple expansion. You could even get a multiple contraction. You're betting on the company growing earnings like crazy. And that's not the best risk-reward bet to make. So I was saying the easy money has been made with Google because the multiple expansion has already happened. Now the multiple has contracted actually back to the average of about 24 times earnings. So the valuation right now is looking much better. Like, if I did not own, let's say, Microsoft and Meta, I would maybe be buying Google over here, but I'm personally not trying to be in the Big Seven. But I think Google's valuation here is really not bad at all, in my opinion. But I still don't believe it's like in bargain territory or it's like too cheap to ignore that I have to go out and buy Google. For me personally, the way I'm valuing Google is I'm using some of the analyst estimates for the next 2 years, mainly because there was some fluctuations due to the SpaceX realization of gains. So they grew like 82% this year, and they expect negative 25% next year, but that's not really adjusted to the stake. And then after that is like 16% a year. So it's a normalization process over the next 2 years. And I posted those two numbers, positive 82%, negative 25%. And after that, I put in 16% a year. I think this is a fair bet on Google. Now, yes, they're investing in AI and they're growing, but there will be some depreciation expense. But I think the company still can grow about 16% a year. Now, the trailing PE for Google is about 30 times earnings. 5 years from now, the company will be much bigger. It'd be, I don't know, maybe $6 or $7 trillion. They would have invested a lot in AI, and I'm not sure if the company can maintain such growth forever. So we're gonna assume that the growth is gonna decline a little bit, maybe from 16% to 10%, 12%, 13%. If that's the case, then the multiple will be a little bit lower. So I'm taking it to 23 times earnings. Now, if I'm using those assumptions, 23 PE instead of 30 PE, 16% earnings per share growth, in total I get $530 per share. The current price is $326. This is about a 10% annual return if I'm buying Google on today's prices. Now, if I want to get it double over the next 5 years with an amazing company like Google, and again, I use conservative assumptions. I always value stocks on the base case to worst case. And if it's better, like if Google grows 20-25% earnings per share, then that's in addition to my thesis. But I don't use the best case scenario as my base case to buy a stock. I always use the worst case scenario. So under those assumptions, for me to get it double over the next 5 years, or about a 15% return, I would have to buy Google at about $265 per share. Now that might sound a little bit low, but the stock was there not long ago. It almost reached 270 back in March of 2026, and it was there like 10 or 11 months ago. So for me personally, again, based on those conservative assumptions, around 250, 265 is it, or negative 18% from here. This is like bargain territory on Google. At today's prices, I believe Google is fairly valued. It's not a bargain. I think it's fairly valued, and there's some upside from here. But for me to wanna not buy more of Meta, not buy more of Microsoft, and for me to go out and buy Google, it would have to be in the $260, $270 range. So this is why I don't own Google, and this is when I'm considering buying it. So I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.